Common mistakes investors make. What is going on, guys? That's what we're going to be talking about in today's video. Maybe you've been watching some of my videos, maybe you've been watching somebody else's videos, and you decided that maybe investing in the stock market is something you want to do and it's going to help you get to the point in life where you want to be. But as first, when you click on this video, you might be saying, well, didn't you already make a video about this a couple months back? And yes, that is true, but I feel like in this video, it's gonna have a lot more value. We're gonna talk about some different mistakes that investors really make. And overall, like I literally just said, it's gonna provide a lot more value to you, I feel like. At the very least, I think the lighting's gonna be a little bit better, you know what I mean? But anyway, hope you guys enjoy this video. If you don't mind hitting that thumbs up button, that really helps me out in a huge way, and it really helps the channel grow massively, more than you even know, I can guarantee you that. And don't forget to subscribe to the channel for everything stock market related news, investing, personal finance, stock analysis videos, and everything in between. So it's no secret that you can make mistakes as an investor, especially early on. Even me, all the things we're gonna talk about in this video, I've made almost all these mistakes. I'm very open about that and I'm very honest about that. Even if you look at companies like Apple, they've made tons of mistakes, tons and tons of mistakes, especially early on. It wasn't even like, no one knew if that company was gonna make it. Like 20 years ago, I know that's very hard to believe in this day and age, but 20 plus years ago, Apple was on the verge of going bankrupt and people weren't investing in it. People really didn't believe in the company. People did not see that vision. And then Steve Jobs obviously came in and he fixed things and he really grew that company to what it is today. And he's very much responsible for that. But the point is, everyone can make mistakes as an investor. And the thing is, when you do make the mistakes, it can be very discouraging. And that's what we don't want. We don't want to be discouraged and get away from investing. And that happened to me for a while. When I first started investing, I just couldn't do it. I was like, nope, this is not for me. This was not meant. I don't need it. I can do something else. But in all reality, you do need to do it in order to get to the place in life you want to be. And I really don't want people to be discouraged because when they initially make mistakes in their investing career, because it could very well happen, and there's no reason to be ashamed of that. You've got to learn. You never just get to the point where you can ride a bike initially, right? You have to get on the bike, you got to start with a training wheel, and then take the training wheels off, and eventually you can ride a bike like it's nothing. Anyway, the first mistake we're going to talk about in this video is not understanding your investing strategy completely. I use several different strategies myself. I buy individual stocks, I buy ETFs and index funds, I buy target date funds. There's a lot of different stock market investing strategies you can use, and even investing strategies in general. I plan on buying real estate in the near future. There's tons and tons of strategy. But the question is, do you understand the strategy that you are using? And if you do not, ask yourself this right now if you are a new investor. Do you truly understand the strategy you are using? Because I guarantee you, if you do not understand that strategy you're using, there's a pretty good chance it's not going to work out for you. And why is this? Why is this not going to work out for you? So let's say you decide to buy into VU, all right? We'll say you buy into an ETF, you decide you want to start investing, you go with a safer strategy, you buy into VU. Now let's say the market drops 20% and you put your hard-earned money into that ETF. Say you put $5,000 into VU and you bought it at $300, that's your cost basis. Now the market in VU goes down 20%. So now you're sitting at $240 a share when you bought it at $300 a share. Do you understand your investing strategy enough to know what to do here and how to respond in this situation? Ask yourself right now, take that example, $300 drops 20% to $240, VU that is, the ETF. Do you understand what to do in this situation? If not, you have some work to do. Another example, I'm gonna use individual stocks for this example. Say you buy Apple at $150, you put $10,000 into Apple at $150. Now let's say Apple goes down 30% to somewhere around $100. Do you understand your strategy enough so you know what to do here? Ask yourself that right now. And again, if you don't understand your strategy enough, you've got some work to do. And if you do understand your strategy, you'll know, well, I bought this stock, I bought this fund at this price, and now it dropped 20%. Well, I'm basically just getting a discount on it because nothing's changed with the fund or the stock, and I'm just getting a better price and I can improve my cost basis. And you only know that if you truly understand your investing strategy. And this is gonna bring me to my next mistake that investors commonly make, and that's investing in companies that you do not fully understand. So let me ask you this, you watching this video, right? When you invest in a company, say you're buying individual stocks, you want to get into individual stocks. When you invest in a company, do you do the full research, or do you go on CNBC and read the profile section and see what the company is about that way? Because if that's the answer, no, wrong. There is so much more research to do, and when you do that, you're not investing, all right? Going to CNBC and reading the profile section is not investing, all right? That is gambling. Not investing, gambling, okay? Not investing, gambling. And when you do invest in an individual stock, and keep in mind, I'm no sort of financial advisor, so this is all just my opinion, but you need to be doing more research and more homework than just going to the CNBC section and reading profile. First, once you come up with the company you want to invest in, you have to read the 10K. And these documents are long, they're not short by any means, and it can take a lot of time, effort, and focus to get through these documents. A lot of these 10Ks are over 100 pages, okay? They're basically a book. They're over 100 pages and they're complex. They're not simple. And if you say something like, is there any way I cannot read the 10K? I already throw up a red flag towards you as an investor. Already. Because what exactly do you want to skip in that 10K? Do you want to skip the risk factors section of the company? Do you want to skip the business model? Do you want to skip the balance sheet? There is so much important information in that 10K that you need to understand. You really shouldn't be skipping anything in that 10K. No, nothing. And if you don't want to read all those documents, hey man, all right, you admit it, just go put your money in an index fund. There's nothing wrong with that. I put my money in index funds all the time. There's absolutely nothing wrong with that. But once you get through the 10K, then sometimes what's going to happen is you're going to be like, I just don't like the company. I'm done. I don't want to research anymore, which is fine. That's completely fine. But then if you do like the company, you do like what you saw in the 10K, you move on to the 10Q, the more recent stuff. Then you end up having to look into the CEO, and there's just so much to look into before you put your hard-earned money into a company. So look at it this way, right? Say you make $20 an hour and you want to buy into Apple stock, and Apple stock is $120 a share. Is that worth 6 hours of work? Is it? You have to ask yourself that. Is putting in 6 hours of work and earning that money, your hard-earned money, worth buying into Apple stock? Do you understand the company enough where you want to buy into, where you believe in Apple stock? You have to ask yourself that, and you have to make that decision on your own. The next mistake investors make is getting FOMO. So say you are looking at a stock and it goes up 20% like before you can buy in, and you're just like, oh my God, it's gonna go up forever. Like I gotta buy in right now so I can just get these gains. No, that's incorrect. Although it might seem like in this day and age that stocks only go up, that's honestly not the truth. But say a stock does go up 20% and you look at the market cap, you look at all the metrics, you've done your research, you look at the financials, and you're like, this company is honestly still undervalued, then hey man, go ahead, buy into it. That's completely fine, go ahead, buy into it. But if you look at a stock that's up 20% and you say, well, this market cap's whack, these metrics don't make sense, it's not a buy, okay? It's not a buy. Sit on your hands. There are other deals in the market. There are thousands of stocks out there. It's not a buy. You'll find a better deal, I promise. And let me tell you, it's probably not that great of a feeling to buy into a company up 20% and you never make that money back just because it had some sort of short-term success that the stock skyrocketed and then it plummeted, all right? It's not a buy. There will be better deals, I promise you that. The next mistake investors make is not selling a stock. And I get it. I get this sometimes because so you buy into a stock, you've seen great returns, you see great gains, and you just don't want to sell it because it just has some sort of sentimental value to you. I really get it, I do. And it can be hard to break up with a stock, it really can, but at some point you gotta put that sentimental value aside, you gotta put your ego aside, and you just gotta look at this stock and say, this is honestly not that great of a deal anymore. I gotta take some profits. Because what's gonna happen if you don't do this, that stock is not gonna go forever and ever and ever. Well, maybe it will, who knows? But you are gonna miss out on some other great deals if you keep that capital in that stock as opposed to selling out and buying other stocks that are better value, all right? So don't be afraid to break up with a stock, and don't get me wrong, let your runners run. If you think that company's still undervalued, let it ride, man. Like ride it. But at some point, don't be afraid to break up with the stock and say, I gotta take my gains. I've seen great returns. I doubled my money. I wanna put this money into a stock that's better valued. And the last thing we're gonna talk about in this video, the last mistake we're gonna talk about in this video is investing on hope. And this is a big one. There's not gonna be a long, elaborate explanation behind it, but this is a big one and it's very important, and it arguably could be the most important one on this list. So some people are gonna get so excited about a stock or an industry, they're just gonna throw everything out the window. They're not gonna read the 10K, they're not gonna read the 10Q, they're not gonna look at the metrics, they're not gonna evaluate the company, they're not gonna look at the CEO. They're just gonna say, I really hope this goes up. I really think this is good. And sometimes you even trick yourself into believing you're not investing on hope, you're investing on reality. And what this does is it creates a lot of speculation, an unhealthy amount of speculation, all right? And what this is ultimately gonna do, it's gonna create bubbles in the stock market if everyone does this. So look at the tech bubble, for example. That happened because people were investing on hope, not reality, hope. And what's gonna happen eventually is reality is gonna kick in and that bubble's gonna pop. And also what's gonna happen when that reality does kick in, people are gonna realize that they were investing in companies that really hadn't proved anything. And like I just said, when it pops, there's gonna be a lot of blood in the streets. You'll see this a lot with IPOs. Companies will go up, 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 because they're investing on hope. People are investing on hope. And then they come down, 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 down. Me personally, I just cannot invest in any sort of company that really hasn't proven anything to me. Bottom line, I need to see reality. I don't need the hope, I need to see reality from a company before I buy into it, all right? Keep that in mind. Reality and hope are two different, completely different topics. Keep that in mind. You need reality, not hope. Reality. In saying that, guys, that's going to be the end of this video. Thank you so much for watching. I really appreciate it. Don't forget to turn that like button blue. That really helps out the channel, and it really is not that hard of a task, and I appreciate every single one of you that take your time to do that. And don't forget to subscribe to the channel as well. We are coming up on 200 subscribers. I'd really like to hit 200 subscribers by the end of 2020. So if you do enjoy content like this, please subscribe to the channel, and I will see you guys in the next video.